How's it going, guys? Welcome to another video on VisualTrades. Today is November 3rd. Right now we just closed at about, let me check right now, 40.83. Man, it seems awfully familiar to something I was calling out not too long ago. Just said it over here. Let me scroll down. Our fuck you price is between 40.35 and 40.88. That's our fib pocket. Today, we're going to be talking about a couple of things. One, why I'm excited as fuck. I don't know if you can see that right here, but I wrote this maybe about 2 days ago, a day ago or two. Or, no, I wrote this about a day ago or two, but this prediction has been up for about a week. You guys could go check back to the YouTubes of me calling out a 40 retest by November 3rd or by earnings, whichever comes first. And as you can see by today's charts, let me close this. As you can see by today's charts, we definitely exceeded that by a good margin. That's the 45 minute. Okay, so the topic of discussion that I wanted to get over, now that all the emotions are out of the way, the key things is why I use ranges, and also me taking a position in AMC. I'm not thinking about the short term. Okay, so to me, fib is the most important thing to respect within the stock, especially with the levels that you're trying to predict which prices you're going to see at close and open and everything like that. And to show you an example of this, I want you to take a look at this charting that was done on the 45 minute from October 1st to present. Compared to our November 3rd 1 minute chart. Notice the similarities in the fib levels when you take a similar retrace from your swing low to your swing high. I was able to map out some of the movements that we would see that play out throughout the day just based off of us breaking these fib levels alone. So, I mean, it's pretty self-explanatory if you compare the last 10 to 15 days of October up until what we see on the time frame right now. Now, because of that, you have to take into account that when you see time frames start to condense fractals to where you can't see a fractal form on the daily anymore, that compression is going to cause it to bubble up, and we're going to see some violent upside soon. I do not doubt that, which I will get into my prediction and why I feel like we will see this tomorrow. Okay. Actually, let me edit that real quick. 44. All right. So recap of the day. We consolidated over the midpoint. See right here the 0.786 fib and the 1 fib for a good minute. I don't know if you can see it on here. Actually, this is the 45 minute. But we did consolidate above the 42.15 for, I want to say, a good, actually, oh, it's right here. Here we go. Yeah, we consolidated for about 45 minutes, give or take, which is really solid because now that we know that we could sustain somewhat of a move headed up to that point, then that just makes our bullish outlook even more supported. Because when you can respect the fib level, especially when you have microfractals playing out like this, you're going to have a lot of conviction as to whether or not you're going to have a lot of people dumping their money into this and assisting in volume. In my take on this, I don't think we're going to be able to see the fractal play out on the daily anymore. You're talking about getting to a point in time where the fractal becomes so compressed that you won't be able to recognize any sort of signs of accumulation and distribution, which therefore classifies us in maybe, I believe, phase D. And phase D in Wyckoff is defined as this. In the next, what we can see after the spring, which is what we saw around maybe October 29th to the 28th, something like that, is the consistent dominance of demand over supply, which is our SOS phase. This is evidenced by a pattern of advances on widening price spreads and increasing volume and reactions on, I forgot what the LPS means, I'm sorry, on smaller spreads and diminished volumes. The price moves at least to the top of the trading range. LPSs in this phase are generally excellent places to initiate or add to profitable long positions. I believe the LPS, if I'm not mistaken, it has something to do with, it has to be right here. I don't want to get this wrong, but I don't know what it stands for, but I know what it means. It's just kind of like a sag in an uptrend, basically. As a matter of fact, let me do this right now. Just so that way I'm not getting anything wrong. Last point of support. There you go. Okay. I'll show you an example of what that looks like actually right now in the 45-minute. This is an LPS. This is for sure an LPS. I even said that we were headed into phase D sometime right now, and which brings me to another support as to why I feel like we could see this price soon. I don't want to say the price yet. I just kind of want to show you guys overall convictions. So I had a fellow friend in the Discord who shared this photo with me. Ignored the left side because this was at market open when everybody's emotions were running high. But this right here reminds me of a similar setup that we're kind of seeing on the 45-minute, where basically we're bouncing off of an equilibrium support off of the gap fill that we had this morning on the way down. I don't know if you can relate it, but I'll try to like flip through it. So kind of bad at explaining things, my bad. So this line right here, you can kind of relate it right here. And that's sitting right above our 0.5, which is why I said that we would see a close above 38.50 today. Just within these brackets, just to be safe, because there's like a pocket encapsulating some of these fib levels, which I will get into in a minute as to why I think they're using hidden fib levels. So if you compare the 45-minute layout to Arcanex's comparison, ignoring the left side, just looking at the right side, this run-up was from late May, taking us to our 1.618 fib retest level. And what that looks like, let me do this. I'm so sorry. There we go. What that looks like if we were to head up to a 1.618 fib level, not this one, this one. For the macrofractal encapsulating this microfractal, we would see a high of at least 5106. This should be a top headed into tomorrow. I'm almost certain. I don't want to say I'm certain, but judging by the way this fractal looks, along with confirmation of higher amounts of volume, with this breakout, I find it very hard to believe we see anything under 39 moving forward. 50 to 52 would be like my top, but in terms of a close, I think it would be safe to assume that we could close somewhere above 44 headed into tomorrow. So with that, I also wanted to keep in mind a couple of things. Hidden fib levels. So I'm gonna show you an example actually right here. So I was talking to Jen Collado one night, shout out Jen, and we were discussing how sometimes there's runoffs in terms of trying to calculate when the retraces are gonna happen in the cycle in order for us to make our conviction come out as true, so that way we're not shaking out any new retail investors. So we were doing some digging, and Jen actually found a hidden fib level that was present within the fib channels, referred to as the 0.086 level, which is a highly respected retest level. Because of that, I believe I did an equation last time I talked about this, but if you take the sum of the fib level 0.086 and you subtract it by a full channels which is 1. Let me do the math here. You get 0.014, which happens to be an exact hit of our double bottom that we saw in the beginning of August. The significance of this level doesn't really provide us anything up until we get to the hundreds. And the reason I say that is because if they do decide to bail out people and the government decides to step in and be like, you know, enough is enough, and we do continue further and we continue to see this cycle play out, I feel like the first and last time we will see this cycle play out will look a little something like this. This is not in accordance to time. I'm still working on when we would see an accumulation and distribution, but judging by the fractals, the fib levels that I just discussed about the 0.086 and the 0.014 retraces, I expect a top of around $256, and with a retrace all the way back down to the hundreds if we were to continue this pattern play out. And to show you a visual representation of what I'm talking about, in case you guys can't see it, here's something that makes it make more sense. So this was in January, where we ran up, and then you had your March run up once they took away the 1 share per person thing, and then once May hit, which I believe the algo was running, but this was just ridiculous. But once we got to June 2nd, you can see this top actually falls within this pocket, almost identical to this 0.886, which is as respectable as it gets from the prior retracement. Now, what makes 0.086 even more respectable as a level to see a potential top is the fact that you take the sum of the fib levels. You got to remember, fib is related to each other, so like the sum of one level equates to the retracement of another, such as the 0.618 and the 0.382. If you do the math on this, it'll equate to 1. So it's almost the same kind of math here. The reason why though is you'd want to use this is because it's a hidden level that they don't want retail to see. You know what I mean? I know it's kind of hard to understand, but that's how they shake us out, and that's how they're so successful with Wyckoff, because these retracements, if you're not familiar with them and their importance, that could be used against you in terms of trying to find validity behind your thesis. I mean, I saw people trying to do retraces by the minute during our low of 33.80 in the pre-market one morning, I think about a week ago. And people were getting shooken out because, well, not shooken out, but shooken out of being confident in their thesis because of the fact that they didn't see the exact price they wanted, when in reality, it was always there. It was just hidden. So because of that, now I'm even more confident that this play is going to play out because of the fact that you have these levels that are being hit to a T. Like, there's no discrepancy. There's no runoff now. Like, you can actually see these things playing out in front of your eyes. But I'm not too keen on hitting exact price levels. That's why I operate in ranges in terms of taking profits and everything like that. So, the validity is there for everybody to see, and I'm not forcing anybody to try to base their positions off of the convictions. But it's notable to know that that's a pretty valid thing to look after. I'm so bad at speaking, my bad. I wanted to talk about another thing. I think I screenshotted it. It was 2 things. Hold on. Oh yeah, I wanted to discuss BBBY. Here it is. Let me see. It was basically what happened last night. BBY was taken off of the after hours screener when it was the highest after hours runner as a meme stock, they like to call it. And part of me wants to resent that, but part of me praises that because that just gives me further confirmation that what we're about to see is something explosive. And the reason why is because if they're going as far as taking off the highest after hours screener of a meme stock off of the screener itself, that just means to me that they're desperate, because one, they know that they probably don't want to go through the troubles of going through the government again through a congressional hearing, like how the meme came about from Kenny G, like putting on the oath and ended up lying anyways. That might be a lie, that might be a truth. It's all for speculation. But yeah, that just confirms to me that there's a disparity amongst the PFOF brokers where they know something is about to happen, and especially with moves like this, especially when it's retail leaning, you got to think of the average investor here. Someone who's new to the market hears that there's a stock that ran 70%, right, and wants to get invested and heard of the short squeeze, but you go to the screener, which is like some of the preliminary things that new traders use in order to find stocks, and the stock isn't there. That's another form of trying to shake out retail to me, and it just makes me even feel more bullish. The last thing I wanted to discuss before I leave is remain faithful in your thesis. I told somebody in the Discord today, I forget who I told, but as long as you see this algorithm playing out, I don't think you should see any problems for the near future being bullish, because this is the only reason why we got here in the first place, especially with cycle theory. Shout out to Astro. A lot of the things that we saw to remain bullish was originating way back in early January, and we've gotten this far. We've already formed our cub, and I would not be surprised by tomorrow, or by end of day November 8th, that we see a close above 44.44, along with a retest of maybe 48.5 to the low 50s. But I'll stick with this conviction for now, or November 8th. But I would like to say that the first major prediction off of my overall checklist has been hit. I will bold that. And hopefully by November 9th, we are testing and rejecting 50 to 52.75. So that's where I remain. Shout out to everybody in the Discord. I would like to give a special shout out once again to Esther Mayfield for plugging my channel, for all the new subscribers and all the new Twitter followers and everything like that. I try my hardest to do this due diligence. Sometimes I lose sleep over this shit, but I know it's for a good cause, for any people who need a quick explanation, or just anybody who's really into the TA aspect and wants to tune out all the FUD and wants to hear the actual fundamentals behind this process. I've been in this since January. I don't like to call myself a 8.01 guy. I like to call myself like a 14.2 guy, because that's when I took my position. And it's been a journey, trust me. Like, dude, you know what I mean? Like, I've seen days where it's like, see my bank account in the negative. You know what I mean? I always like to remind myself that for the humble beginning, so that way moving forward, I know exactly what I need to do with my finances, so that way I'm established, for the remainder of my existence, and to break anything generational or take people out of any sort of debts. That's my goal. I don't know what you guys' goals is. Lambos for life, maybe. I'm trying to get to that too, but that's about it. I don't know what else to say. It was just a really exciting day. Hopefully I'll run a couple of time zones, and hopefully we could see the high 40s tomorrow. My firm target is a break of 44.44. I'm sure that with enough volume we can do that, because this move downward on the 45 minute, as good as it looks in terms of what it is in terms of downside, maybe you could break this gap. It's really an unsustainable move compared to the bull crawl that we had leading up to this, which makes all of these levels really strong support. I don't see us going below 39 again. I just can't see it. We have an established uptrend that I called out a week ago. Dude, it's picture perfect. And once that uptrend, in my opinion, gets above this 0.618, it's game over. It's game over. So, that's where I stand. So, have a good one, guys. Have a great Wednesday, and I appreciate you guys. Thank you.